Cheers to Outliers Clustering Retail Trading Team. This is your routine debrief. Let me get the sound check going and then we'll jump right into the warm up here. Stand by, please. Beautiful. Okay, so Mr. Market disagreed with my bearish assumption that I provided for last night's routine briefing. That is going to happen sometimes. That is why it's so important to be able to react to what we see when we start in the morning, and that's what happened with the warm-up. And that's why I always direct you to this document. It is in the description to this video. It says warm up with me here. And when I reference the order flow lab stuff, by the way, please do use this read first. You can see a little more about that stuff in there. There's comments all over the place here, so wherever you see that cute little triangle on the right of the rectangle are some explanations and sometimes links otherwise. So yeah, so last night I did take the short, and the short got stopped out very promptly this morning when we started to explode higher. Yeah, we were ready for it. So was able to take advantage of the breakout. As the day wound on, I did end up getting stopped at a couple points that turned it into a red day, which is unfortunate. However, as anybody who traded saw today, it was crazy price action. I did get stopped quite literally at the high, maybe 2 points below. Again, that's okay. The other futures got stopped out a lot lower, and that's the important thing, is managing risk, and sometimes it's just not going to work out. So that's what happened with me today. But how we can use this to make it applicable to everybody's trading and not just my diary entry will be to look at what I really think is the biggest takeaway from today, and that's what's highlighted right here, that 19.81 where we closed in the VIX. What's going on there? We're still consolidating near 20. So as we move forward in the debrief today, we'll discuss what I see as a lot of bullish price action signals. Yet at the end of the day, as far as I'm concerned, the bulls are not out of the woods, as we have not lost 20 with any vigor in that VIX product. So yeah, so I just want to direct you to this document one more time. As I always do in these videos, this is completed by 10:30 every day. It gives you the bulk of I think, what you need to help inform your trading plan. Of course, it's not trading advice. We don't do that here, but it should be helpful to just kind of get levels and a picture of what's going on in the morning. So moving on from the briefing, we're going to jump right into the weekly chart. So we're going to go from higher time frame to lower time frame, and there's not too much. The nice thing about these higher time frames is there's not too much junk on the screen. It all comes down to the trend lines. So what happened today? We finally, again, we did pierce it here for, I believe that was CPI. We again pierced the top of that trend line. We built out a little bit of time and volume, and the bulls are really making a run for it. We really want to watch what happens around that trend line. And big picture, it's all about the continuation or the rejection at the trend line, and it's all about what happens as we continue to fill out this inverse head and shoulders that you can see that I always bring up. So if we look at a little bit more granular on our macro chart, which is a daily chart, so the main thing that I'm looking at here, just a couple things. So first, as you can see, we did break very nicely above that yearly POC, and what that implies is at the next stop, assuming that we do not lose that POC if and when we retest it, the next stop is this 4100 area. Again, the top of value. This is a 365-day chart. That will be a magnet now. Again, we have to see what happens around the trend line. I can't say I expect consolidation based on the several outliers that we've been seeing lately. However, I can hope for it, from my position at least. I hope that we have consolidation. Yet if we do not, I think that 400 is the next stop. You can see there's a lot of space in here. There is supply, as we'll point out some other charts, but really my eyes are on that 400 area unless we lose this POC. So tomorrow we have, I believe it's PMI is the news, so be watching for that. It is marked as a red event on Forex Factory, which is significant, so potentially that could shake things up. Yet again, I defer to price action always, and we'll be watching the key areas that we'll talk about. So, yep, really that's the only important thing on the macro chart. I just want to keep it simple. I know there's a lot of lines on here that has to do with some of my order flow lab studies. Just to keep it simple for the debrief purposes, we're above the POC. So we'll watch what happens if and when we do retest it. That's that 39.90 area. Yet until we get below it, I'm assuming we're gonna move toward, meander toward, hopefully. Hopefully we'll get some premium decay, but we'll meander toward that 400 area. And hey, we may hit it tomorrow. Who knows? Outliers cluster, as we said in the cheersing of this debrief. So that's the level to watch there. So just to look at the 4-hour chart, and I think it gives us a pretty good idea of specific levels to watch tomorrow. I'm watching these two zones, two stack zones at about 40.50. Excuse me. About 40.50 area where we saw that slight breakdown today, and the bottom near that gained level at 39.85. And that 39.85 is going to be super important for more reasons than just this 4-hour chart, but also because we had another one of those open drives today with that 85 area being near the low. And so what those open drives are is this one is going to be 39.85 to 4,000. It's just the first 15-minute candle of the day, and I expect that to be our first level of strong support. Again, if and when we do try to test that POC. You can see if I just condense this or uncondense, I don't know what the proper term is there. You can see we've entered this area of significant supply. Above that 4080, you don't see anything marked just because I think it's a quick ride to 4100. I'll have to go back in the TPO to draw some new zones. Yet we're just kind of consolidated around this monthly value area high. It's a prior week value area high. It's a trend line. There's a lot going on here, which is why I'm hopeful that we might see some consolidation. So just kind of paying attention to the most important areas. It's going to be the trend line, obviously, and then it's going to be that 39.90 POC below. And before we even get to that, we have to deal with the prior week POC. It's not as important as a 365-day POC, obviously. Yet I think you can see if you compare this chart to yesterday's, the demand is starting to stack, and you're starting to see a lot of buying conviction in the market. We saw the first glimpse of it Friday, and today's move was really significant, in my opinion, for the bull case. So if we go to the hourly chart, which I call the volume by price chart, you can see a couple things are important in this. The double distribution that we've been talking about continues to fill out. However, the POC for that distribution has moved up into that upper distribution, and it's really at that 40-45 level for this week so far. And what I'm really watching for here is obviously it's the first day of the week, so this profile is going to be a little bit misleading. I'm watching what happens to the monthly POC right here. It's that pink purple horizontal what's that called, histogram that you see on the chart there. If you bring your eyes near this 40-15 area, you can see we're pretty darn close to that POC moving up. So I'm going to be watching what happens there. If we go back to the chessboard chart real quick, you can see that is right where the prior week POC is as well. So that's going to be an important area of potential support. If we do get that low, I know it doesn't seem too far away, but the trend is definitely up right now, and the bulls are strong. So watch what happens at that 40-15 area. And then again, we go below that, we'll start looking at 39.90, but I think that's the first area of support that's going to be immediately important for tomorrow. And we can jump right from there into volatility. So if we look at the volatility chart, again, I mentioned, I don't know why. You ever notice in YouTube videos, people always say we when they're the only ones talking? I guess that's a habit. So I just said 5 minutes ago that the volatility continues to hold at that 20 area. This is VX futures, by the way. So if you look at VIX, it's that 1981, 82. I don't remember what the number is area. On the futures, we're a little higher, but we're really watching that 20 area on the VIX itself. So you can see today we based really from midday Friday into today's session. We made a move lower, retested higher, and fell back lower, kind of closed mildly lower there today. So it makes sense. I think and nobody would argue that the Bulls do have the momentum right now. Yet we still haven't lost. There's been no convincing break to the downside. So I just want uh, to say one more time that VIX 20, VIX 20 is, I think, the all important level to watch as we go into tomorrow and proceed through the week. Um, at least until FOMC. I know that people think FOMC might shake things up. Yet again, I'm just looking at price action and what everything's telling us. And to me, we start to break above the trend line. We start to hold above the trend line. We start to make that move to 4100. You start to see VIX drop below 20, and that's signaling the end of the bear market for me. So at least the first part of it. And yeah, I mean, I've been saying it since the beginning, or excuse me, I've been saying that for several routine briefings now. Every time that the VIX has reached, or debriefs, I know I switch it up. Um, each time that the VIX has reached that 20 level, you've seen it bounce. You've seen that be kind of the high of any move in the ES price, and now we're just kind of seeing that consolidation action. Um, and and I think that once we really reclaim the trend line with strength, which could potentially be tomorrow, and we close above it, I don't really know how many points specifically, but probably if we close above about that 40, 45, 40, 50 area, that I think is signaling that there's a lot more upside to come. Again, that'll also coincide with us filling out that inverse head and shoulders pattern that we see on the weekly. Just to show that one more time, that will coincide with us filling this out as well. So we need a lot more than a break above 400 to really, I think, complete it and push us high into supply that's going to be above that CPI high. Yet again, if it fills out, you see the VIX cooperate with the bulls, and you see price start to close above that trend line, that's going to be a pretty significant signal in my opinion. So that is all I have for the debrief itself. So just a few announcements, and then I will sign off here and wish everybody a good evening. So I'm still moving from review to Substack. Uh, the website does work again. retailtrading.com will direct you to the Substack. There will not be any new newsletters until I finish all the integration, learn the platform a little better. It's not as easy as one might have hoped, so please, I just ask for patience, bear with me. We'll get back and running again, and we'll be better than ever once we do get that going, and I'm hoping to finish that migration this week. And that's all for today. So as always, please feel free to respond to this video via the comment section. I will be happy to answer any questions. I will like any compliments as well. I might even give it a love. So please engage there. You can also find me on Twitter at Routine Trader, and I'd be happy to talk to you there as well. So if you enjoyed today's content, please do give it a like to help with the YouTube algorithm. And with that, till tomorrow, stay classy.